everyone, welcome to the RinggitPlus Show. My name is Pang, and in this episode, we are going to talk about a very important decision that we're going to have to make this month. With me, and he is going to help us with our decision today, is Han, co-founder and director of RinggitPlus. Han, are you there?
Hi. Hey, Pang. How
Hey,
are
Han.
you?
I have a very important question to ask you. It's September, and that means only one thing, and we have a very important decision that we're gonna have to make this month, and that is, do we upgrade to the new iPhone this year? No, I was just kidding, man.
Obviously, the answer is yes. You have to know.
No. It's September, which is actually a very important month. September 2020 is a very important month because this is the last month where the 6-month loan moratorium, and it's going to end this month, right? And as we've talked about before this, we've shared a lot of conversations with this offline, obviously. The loan moratorium is ending, but there is something called the extended loan moratorium and targeted financial assistance. So this is announced back in July, and there's quite a few things, right? So before Han, before I talk to you from a certified financial planner's perspective, let's give a really quick introduction on what's new in this extended moratorium. Shall we go?
Yeah, I mean, like you pointed out, right? Which is the original moratorium was quite a big thing. It had never been done before. The government announced it in May and said, you know what, like you don't have to. In April or May this year, said, you don't have to pay your loan installments for a bunch of different, credit and loan instruments for 6 months, right?
Yeah.
So to understand more, you need to go back to that initial announcement, which is, and our previous announcement or our previous analysis of that, right, was that regardless of whether you needed it or not, how it was structured made you want to or and had to take it because it was not opt-in, right? It was just, it's blanket. You have to opt out of it, right? And for me, like that was a very big thing which affected, everyone. Everyone had to do something, or either that or be affected by it. But for me, the key things to note here with this new kind of extended moratorium is that unlike previously, it is not a fixed period, right? We've done analysis of the banks. The tenor is different from bank to bank, right? It ranges from 3 to some banks do 15 months. The second thing to note is that this time, interest will accrue and most likely compound. That again depends on bank to bank on this moratorium period. So interest will accrue, right? Unlike previously where with car loans, it did not accrue.
Correct.
And the third thing to note is not everyone's going to qualify for this extended moratorium. It's been a little bit more targeted. You either have to prove it or declare a loss of income or employment.
Right. So I think the main difference here that we talked about with the extended moratorium is that the government or Prime Minister has actually stated that it is a targeted assistance, right? So it is only designed for those who need it. So there are additional terms for those who are unemployed, and as well as those who are suffering from salary cuts due to COVID-19, right? So a lot of us, I think there was a lot of data that talks about this, and the economy was severely impacted. And as a result, this extended moratorium is actually something that I think a lot of people believe is necessary. And the key thing on top of what Hans mentioned, right? So for unemployed, you get an extended moratorium for additional 3 months, which is from October, November, and December. But after that, the moratorium can be extended depending on the individual's circumstances. So in this case, if you are still not with a job or you're still not employed, you need to speak to the banks and they may give you an additional moratorium. Now, that's only for those who are unemployed. But for those who are going through a salary cut, they will go through what's known as restructuring and rescheduling, or commonly known as an R&R, for all of your existing loans. So the banks will offer you fresh terms, and that could include either reduced monthly installments or paying only the interest portion, or additional assistance and extensions, which is based on their salary situation. So in this case, it's up to the banks to offer what terms based on your situation, whether it is 50%, 60% cut, or however. And one thing that Bank Negara actually has stated very, very quickly was that if you take up this extended moratorium or any kind of financial assistance during this period, this will not appear on your CCRIS, which means that it will not have a negative impact on your credit score, which means that in future, if you're applying for additional products, this has no effect. So that's actually pretty good, right? Han, this is not something that's very commonly done in the past, right?
Yeah, no, I think the two things to remember there with what you just said is you have to do something to actually have this moratorium, right? It doesn't just happen to you. It's not a blanket moratorium for everyone. If you've got a salary cut or lost your job, you have to go and make an application for it. It doesn't just happen to you. So come October 1st, when the original 6-month moratorium period ends, you've got to have something in place already. So make sure you do something.
Right.
You make the application way in advance. So that's the first thing. And the second thing, yes, you pointed out, right, which is a lot of the time when people think about restructuring and reorganizing their loans, either with a bank or with government institutions such as AKPK, there is always a fear that by doing so, you might impact your ability to get credit further on because AKPK will mark you or the banks will mark you as somebody who is having trouble. Now, so I really commend the move from Bank Negara. They've done a good job to just say, all right, look, just do this. It will be as if you've just had a difference in your loan term, loan tenure, loan installment amount, and that should not and does not impact your CQ's record. So that's absolutely a good thing.
Right.
But keep in mind, right, like that the not having your CQ's marked is one part. The second part is what is the financial impact to you, and it differs from bank to bank. So one of the things which we talked about was let's figure out for Malaysians what each bank is doing.
Right.
And whether or not each bank is what kind of structures or what kind of options that each bank give to Malaysians, so we can have a review and just tell Malaysians what your bank is doing.
Yep. Actually, we've actually covered quite a number of banks in our blog. We've done some announcements ever since they were open for applications from 7th of August, actually. And what we've done is that we've gone through each of the banks' websites and just gone through whatever FAQs that has been uploaded. What's interesting, first thing, Han, to note was that not all banks were being very transparent in the sense that not all banks were offering or were sharing the a lot of information online, right? So we have had some banks which just offered a generic contact us email text box, and then they will then contact you and speak to you directly about your loans. But a few other banks have actually offered like really comprehensive FAQs, and I really think that was such a good move from them, because as borrowers, I think you also want to see what's on the cards first before you even contact the bank or before you even decide, right? And you have a few banks, right? Like you have Public Bank. I think they did a really good job with their FAQs, offering like in terms of like breaking down the offerings, examples, and all these things. OCBC Bank has the same things, and also if I'm not wrong, CIMB, right? We'll get to that in a bit. One of those things that why I really liked what these banks have announced is that they are telling you in advance what to expect before the bank officers call you and give you your terms, right? So for example, OCBC Bank and I think Hong Leong Bank is also offering two things, which is something called step-up payments. So step-up payments is a pretty interesting solution and actually fits very well in this environment, right, where people are on reduced salaries but they are temporary. So step-up payments is essentially a restructuring of a loan where you pay lower amounts and gradually increase that repayment over time, right? So it means that people who are on reduced salaries, you pay less now that your salary is lower, and then you slowly and progressively pay more when your salary has been reinstated. And this also means that for the banks, they don't have to renegotiate and give you another fresh term for your loans, right?
Yeah, I think that makes sense, right? That's kind of not the definition of, but that's kind of the embodiment of preheating, right? Which is you're having a salary cut now, right? And it's temporary. So during this time where you might not be able to pay your loan either in full or in part, banks are taking the proactive approach and saying, hey, like you're gonna get a bit of relief either on a part or full amount of your installments. But when and hopefully when your salary gets reinstated, your income starts recovering, and you're in a position to be able to repay, you can then organize that, what you call it, step up. So that's a nice way to think about it as well. You step back up your installments when you are able to do so. And my guess is, and Pang just confirm, that if you're still not able to at that point, you can still further kind of negotiate extended extension of the moratorium.
I think that's likely. For some banks may be able to do that. Besides the general guidelines from what our Prime Minister mentioned, you have people like Public Bank who just came in and said, like, if your salary is below a certain threshold, 30% or 50% or 25%, your repayment terms adjust accordingly. So it's actually a blanket term for all borrowers, regardless, and it's all based on your salary reduction, right? And what I really like was that they gave you all these things. They gave you an example, and they'll tell you how long is this extension for. So if I'm not wrong, I can see here it's you can get this reduced payments all the way up to end of next year, December 2021, right? Which I think, for a lot of us, that means you have that much time to either get your salaries reinstated or even get a new job during that time, which I think is really awesome.
Cool.
Yeah.
So what are some of the less awesome things that banks are doing? And obviously we have to caveat this, that this is at the time of recording, and the banks may change as they learn more about what their customers want, right? But what kind of things that you would hope that other banks would do more of that they're not doing today?
I think for starters, a lot of major banks have not really shared a lot of information online. I think the first point of contact with the bank for a lot of consumers is on their websites. And like, if you see, like we shared some stuff from Maybank and RHB, they generally just give like generic contact us page. We care for you. Let us know what you need. Or in some of the contact pages as well, they are asking what kind of assistance do you need. So I think that's okay. But at the same time, it would be nice to know as a borrower. So I'm obviously a borrower myself. It would be nice to know what are the banks offering before we go ahead and contact them. Because again, that's another, you have several working days when you submit the contact form to the point where the banks actually contact you, right? So during that time, you don't really know exactly what to do, and the website information doesn't give you a lot of things to go with. So that's that's just one point I feel like the banks could really improve on. Secondly, I think we can also look at how some banks are treating the extended moratorium. And for example, I think we can talk about CIMB Bank, which what they're doing is something called capitalization of interest. So Han, correct me if I'm wrong here. Maybe you want to share what does capitalization of interest mean?
Yeah, I guess this kind of period allows banks to introduce terms which are accurate to them, but really needs more explanation.
Yeah.
So that people can understand. So capitalization of interest is very simple, which is you're not paying your installment. For example, you took the moratorium, right? But interest has to be accrued. And what happens is they take the interest and put it on top of your loan amount, and it becomes your new loan amount. So that interest has capitalized onto the existing loan amount, which loans are a form of capital. That's where the word capital comes from. So this whole amount becomes this much larger loan, which you have to then pay these new installment amounts on after the moratorium period's over. And I think one of the things you mentioned, you will see it in this CIMB example, which is quite interesting to note, and I think it's important for people to note and read the fine print, right? Where they did mention they will capitalize interest all the way back from the initial 6-month moratorium onto a car loan or a hire purchase loan,
and even for personal loans.
Yeah, if you take this moratorium, right? And for both car loans and personal loans. And why I mentioned car loans earlier was that this, while you can still choose to benefit from interest-free, i.e. no capitalization of interest period, for this 6-month moratorium period. If you then subsequently take that extra 3 months, what CIMB is saying they'll do is they will take the interest that was supposedly not accrued, and they will actually accrue it, capitalize it, and then add it to that 3 months to make it 9 months worth of interest that you have to capitalize and start paying on come end of December after the extra 3-month period
Right.
is done. So
I
just
think
kind of fine print that while this is still in your hands as the customer, like you got to watch before you accept these new terms.
correct. So I think this is very important to note here, right? Like what capitalization of interest really, what impact does it have? Is that when they capitalize the interest, this 6 months interest goes into your outstanding balance. It is treated as outstanding balance in the sense that this can then be charged interest as well. Am I right, Han?
That's exactly right.
Right. So that
yeah.
technically means, that technically would mean that after that, if you decide to take this financial assistance, regardless of whether it's a moratorium or a restructuring of your loans, this interest from the last 6 months will be added into your outstanding balance pool. And from October onwards, if you're doing a restructuring, this is going to compound as well because interest will be charged on this interest, right? So this is something that's very important to note. So, Han, sorry, I just want to point this out again as well that when we did the analysis from the initial 6 months moratorium, we knew that for home loans, this was a given, right? That interest will still accrue during a period simply because it is a variable rate loan, right? Correct me if I'm wrong, but this is a variable rate loan for home loans, and that means that interest will still accrue during that period. But for personal loans and car loans, I think that's where things get a little bit interesting because we may not know that CIMB is the only bank that's doing this, right? But in particular, I want to point out that for car loans, our finance minister has actually stated back in May that for car loans specifically, interest during this period, that April to September period, will not accrue. And we're not really sure why in this case, like CIMB is actually doing this in their FAQ. And this FAQ really leaves nothing to the imagination or there's no, I don't believe that it leaves a lot of room for misinterpretation, because I think if you read the FAQ, it actually says your new principal balance will be a total of your 6 months accrued interest or profit plus your outstanding balance as of 31st of March. So and I will also credit them for this because it actually has a little section that says impact to you if you were to participate in this program. It is telling you to consider that if you took this assistance, your interest for the last 6 months has accrued. And this is specifically even for auto financing, which is the car loans, right? I'm not really sure, but I think in this sense, like, we can't, sorry, just to continue, right? Like, we can't say for certain that CIMB is the only bank that's doing this, simply because, going back to my initial point, right, that a lot of banks have not really revealed their terms, and in their FAQs is very vague. It says contact us and we'll assist you, right? Yeah. So really, Han, like this really drives home the point, right? Like if what can we do about this, like for our borrowers, from a borrower's perspective, what do you think about this moratorium itself? Before we move on to what should consumers do, I think I want to see what you think about this moratorium itself.
Yeah, I think, look, I mean, you made a very interesting point about CIMB. I think the most, and you said like some other banks may be doing this. I think it's very important for all consumers or Malaysians to look at what the banks are offering them with this new extended moratorium before accepting it or taking it up, right? Because there might be these little terms which cause previously announced non-accrual of interest to be then accrued. I mean, fortunately, like the silver lining is that you still can make the choice. You still have the decision to make. It's not forced upon you. So if CIMB or any other bank decides to say, hey, look, like you can take this extra 3 months, but we're going to have to capitalize the interest from 6 months ago. If you do, right? So it becomes very expensive to do so. At least you can still make the decision. Okay, thanks for letting me know. I'm going to choose not to do that, right? So that's the kind of small silver lining. But in general, other than that specific point, I think for this extended moratorium, it's a reasonable balance of making sure the banking system is not totally in shock, as well as being a bit targeted about who needs a moratorium or a payment relief, right? It's probably a good balance of what the initial moratorium should have been, had they have enough time to figure it out and announce it earlier. But the key things to remember, again, like I said, with this new moratorium, I think it's a good balance because it's opt-in, so it's not forced onto anyone. You choose, hey, I need it, I apply for it.
Yeah.
You're most likely to get it if you can demonstrate loss of income or loss of employment. The second thing is that interest is accrued on all loans this time, not just some loans, during the new extended moratorium period. I think this will cause a natural drift towards people who will take it, who will be the ones who only need it, rather than who can make a quick buck out of it because interest was not accrued on a loan installment.
Yeah.
And the third, I think, most important thing is that it's extremely targeted by nature, which is, you're not giving it to everyone on a blanket or opt-in, right?
Yeah.
You're giving it to a targeted people, and you having to make them apply for it. I think only those who need it are then eligible. I think that's the right way to solve the problem if you were looking at solving that problem, which they were, right? And I mean, but a couple of things which I think are a bit worrying about this extended moratorium is that it's very clear that there are different treatments and options between the banks, right?
Yep.
Some, they put you mentioned they put multiple options on the site, some with just a contact form, right? And a contact form is okay, meaning I get to contact my bank, but it's less useful from an information perspective, especially for us, right? When we are trying to make things easy for Malaysians to understand how to move things forward, and for Malaysians themselves to try and understand what is my bank doing. I think this tells me that the government or the regulators or a combination of the two with the banks should have come up with some sort of standardized options for everyone, so that you don't have people who are lucky or are fortunate to be with one bank and not another, right? And
Yeah.
there is some sort of standardization, and you don't get penalized just because you're with Bank A rather than Bank B, who had this option which was more suitable for you, right? I think this would have been a way better experience for borrowers. No need to learn new terms like step up and specific to the bank, step up, capitalization of interest. You get a standard 1, 2, or 3 options which are already pre-agreed between the banks, Bank Negara, and the government. And it's all pre-explained, pre-organized. You just choose 1, 2, or 3 if you're eligible, and then you don't have to have a whole new learning process of what these terms are to determine whether you should take it or not. So I think that's in general my view, which is it's a balanced way to do it, this moratorium, but I would like to see it in a little bit more standardized, so you don't get this disparity between banks.
So now we obviously come to this point, right? Like, if I'm a borrower, what should I do, right? Like, I think in this case, Han, you're going to be very important. It's going to be very important for you to share with us, like, if, for example, I have a car loan, I have a home loan, maybe a personal loan as well. Like, what can I do? What should I do, right? Like, my salary may not have come back. I may have lost a job. In these situations, what should consumers do?
Yeah, I think given the new terms, right? What are those new terms? You have to opt in. There's interest accrued and most likely compounded once you figure it out. And it's targeted to people who've lost their incomes either in part or in full.
Yeah.
In the simplest terms, right? I say this in any slide that I do. If you really need it, you should take it because it's there for you. It's there for that reason, right? Don't go saying, hey, I'm too proud to take it, and then end up racking up other forms of more expensive debt, for example, credit card debt, and you revolve on that rather than taking this new extended moratorium. If you need it, take it. So that payment relief is for that reason, and it's done on loans which are going to be cheaper than racking up credit card debt to cover this period where you have less income, right? The other part about that is why you should take it is that any fresh loans that you might want to take up, so other than credit card interest, any fresh loans that you're gonna take, all right, will likely be unsecured and will likely be more expensive than your house or your car loan, right? So that's a couple of things to note.
So basically, what you're saying is that if I took a personal loan and not take the moratorium, I took a personal loan to pay off the existing current loans that I have, it wouldn't make much sense because the terms that are being offered to me is not going to be the same as the not going to be as I would say competitive, right? In that sense.
No, and ultimately that's just the way unsecured lending works. Right? Unsecured means
Right.
there's asset behind it. Right? So if you've got a moratorium on your house and you're considering whether to take it or not, if you're going to have to borrow money either from your credit card or an unsecured personal loan to cover your expenses while you're paying off your house loan because you feel you have to pay off your house loan, then borrowing at 5, 6, 7, 8% for these things on cards or unsecured loans versus taking the moratorium on 3 to 3.5% on your home doesn't make sense, right? So if you need the moratorium, take it, right? It's not going to affect your secrets. It's not going to affect your kind of repayment history and secrets. You're not going to have like a mark that says you haven't repaid. So take it, right?
Cool.
And
that makes sense.
you don't have to take it for all your loans, right? You take it for the ones that you need it for, right? So if you go whole, you take your entire kind of loan balance or your monthly loan commitments, and you realize, I can actually probably pay off some of it, but not all. You take the moratorium for the ones that you need, right? For the amount that you need in a certain order, right? And the order is go from cheapest to most expensive, meaning you take the moratorium for your home and your car before your personal loan or your credit card, which has a term loan on it, right? So you take the cheaper interest moratoriums and you start paying off your more expensive or higher interest loans, right?
Right,
If
I understand.
you afford to.
Right, that makes sense. So in that sense, like, best to sit down, look at whatever commitments that you have, and then go for the ones that has the highest interest over time, right?
Pay off the ones with the highest interest. And
Okay.
take the moratorium on low interest because the interest you're accruing is lower on, typically lower on housing and car loans than credit cards and personal loans. So if you've got a personal loan out there, you've got credit card bills to pay those off as quickly as you can and take the moratorium on the low interest loan. So then you don't pay that much interest here and you pay off the high interest stuff. Right? So that's how to manage. All right. If you can manage to pay off some, pay off the ones which are more expensive first, so they cost you less in the long run.
Over the cost. Yeah. Okay. Understand. That makes sense. Okay. So let's just take some key takeaways here, right, from this extended moratorium discussion, right? Like, number one, I think the most important one, and I think Han, you've stressed this a lot as well. The extended moratorium and targeted financial assistance is aimed only for those who need it the most, right? And as we've shown with some of these examples from the banks, is that if you need this assistance, you need to be really careful and check your loan agreements before signing them, correct? Because your terms will change as part of the R&R, and that may include things like capitalization of interest from the 6 months moratorium or additional that we may not even know about, right? Because a lot of banks have not really said much beyond what's on their websites. But I think one thing that's quite interesting that will be from some people's perspective, right? And I know you said this before, but if, for example, I am financially comfortable to resume my loans, but obviously in the sense there is always that I would say a temptation, right? Like, I will pay X amount of interest, but it still means I have extra cash on hand. Should I still take this moratorium, or
I think,
seek any kind of assistance?
Yeah, I think if you feel financially confident to restart paying your installments, you should, right? Because ultimately, most loans are interest bearing, and they're usually interest bearing by a lot more than what you can get from kind of deposit accounts or even high interest deposit accounts or even high interest fixed deposits out there. Right?
Because the OPR is so low these days, right?
Regardless of where the OPI is, right, loans typically are higher than savings, right? So
yeah, that's true.
If you can afford to do it, you should do it, right? And I mean, the other part about why you should be doing it, if you can, right, is that not just that you save on those high interest loans, right, and you don't have those things accruing just because you want the cash right now. Because it gets expensive over time if those loan facilities are high interest. The other part about that is that every single installment that you repay back frees up capacity for the banks to lend more to people who actually need it, right? So it's a slightly altruistic, slightly thinking about the greater good, right? Which is, if we don't pay back our loans, even if we could, right, that reduces a lot of the available capacity in the banking system for banks to then take our money and lend to people who actually need money or need credit, right? So that's the other kind of the kind of nation building element part of it.
Right.
But for the people who are comfortable, have not seen reduction in income, have a big enough savings pile to last them through turbulent economic times, it's time to repay those loans, right? It's not a good habit to not repay your loans, especially when you can benefit from paying off those high interest ones, right? So for me, that's the key message I think we need to give to that group of Malaysians who can actually do it.
Right. Right. I think on that note, I think that's a really good way to wrap up our discussion, because, number one, those who need it, take it. If you can afford to, go ahead and resume it. Help yourself, help the country. I think that's all there is to it, right? Like, that's the extended moratorium and financial assistance for you, right? I think that's all we have time for today, actually, Han. Thank you so much for sharing all this information. I think especially with the explaining of the terms, what we should do, and I think next week or in the next episode, let's talk about how we can still take advantage of this moratorium, or any ways that we can save money moving forward from this moratorium. Let's talk about this in the next episode. Yeah.
Yep.
Okay. Cool.
Thanks